Hey everybody, this is John and welcome to the free video. So what I want to show you here is this. On the spiders, we had a break of the high of the low day. That is a buy signal. Now it doesn't mean the market is bottomed. It just means when that happens, you're typically just going to keep rallying to the next level of resistance, which at this point lines up with that voodoo line, which also lines up with that 21-period moving average. Okay. If you look at the Qs, that did not happen. So one of the biggest questions I got today was, John, can we buy Apple? And I was like, no. Now, it may rally, okay? Apple may go from here and rally to new highs, but we didn't get a signal. I would want to see it at least close above the high of the low day. It's a very, very simple way to keep yourself from buying a falling knife. Okay, so compare, in its simplest terms, look at crude oil. If you look at a bigger picture chart of crude oil, buying a falling knife here would have killed you, but at least waiting until, and this is a weekly chart, a break of the high of the low bar at least gave you a fighting chance, right? So, if you look at that on a daily chart, break of the high of the low bar, at least you could make some money on it. So if we look at something like Facebook, okay, we broke above the high of the low bar. Okay, that's great. If we look at Google, it failed to break above the high of the low bar. So in this kind of market, if I'm looking for longs, I'm going to look for stocks that are either that one, if they have been selling off and if they have been pulling back, that are at the very least breaking above the high of the low bar, or from there, they just have to not care what the market's doing. AMBA, okay, so this is one we did in the room. Now we're kind of starting to exit this trade, but this is a stock that didn't care that the market was going down. VIPS is a stock that doesn't care that the market's going down, and this is one we'd set up as well in the trading room. But that's the big thing. So I know we all love Apple. We all love to trade Apple, but at least wait for a buy signal in this kind of a market. Okay, so that's the main thing there. Other than that, one stock I like here, and this is a tricky one to get into, is AutoZone. This is another stock that I like because, here the market could go up or down, but AutoZone doesn't really care. So this is a very simple diagonal where we bought the 640 call 36 days out, sold the 660 call 8 days out. Okay, and in a perfect world, what happens is this could rally up to 658 by the end of next week. This expires worthless. We keep that, and then this just continues to go higher, and we could sell more options against it. Okay. Tomorrow is Friday. It is going to be, I think it's going to be fairly volatile. I think that's something that we want to keep an eye on. And then the other trade I like here is LinkedIn. So LinkedIn, now it didn't light the barns on fire or anything today. It was up at $1.47. But this stock, if we look at a chart here, doesn't care if the market is going down. And that's what I love about it. When the stock market's been selling off, it's trading sideways. When the stock market's going up, it's trading sideways. That is the perfect stock to sell puts on. But also keep in mind, we are setting up a squeeze with waves above zero. So the path of least resistance for this stock is higher, and this is something that I want to get more aggressive on to the upside. All right, hope it helps. You guys have a great night, and we'll see you at the next update.